even as the markets charge forward, big worries for the big banks. The Senate voting unanimously to end government subsidies for institutions that are deemed too big to fail. And now there's talk that a new measure could be introduced next month that would add a surcharge to the country's biggest banks.
Indeed. Bart Naylor of Public Citizens thinks the Senate should do that and a lot more. But Lenwood Brooks from Public Notice says careful what you wish for, because new fees for banks may just get passed on to the customers. Gentlemen, welcome. Why do you think, Mr. Brooks, that those fees will get passed on to the customers? Because history tells us that's the case?
Yeah, it tells us the case. If you look at what we did in DoddFrank during the liquidation process, the big banks are already effectively taxed. So the answer to this problem is not a new tax, and it will eventually get passed on to the consumer. But big banks should worry. A 99-0 vote in the Senate does show there is momentum.
Bart, I mean, you're in the camp that says we should break up the big banks, that there is a thing too big to fail. But what's too big? Where's the watermark? At what point is that bank too big to fail? And who should decide that?
Well, it's a good question, and it does need to be studied. Banks have been closed up to $150 billion in assets. We roughly have 5 banks that are more than $500 billion in assets. It's the big 5. And clearly they need to be broken up. We have a major taxpayer subsidy that we shelled out 5 years ago in terms of the bailout itself. We also now have too big to jail, with companies such as HSBC laundering $200 trillion worth of money without any real penalty.
But I think we should be skeptical of Washington, because a few days before Dodd-Frank was signed into law, Secretary Geithner said this bill is too big to fail. We're figuring it out now. It doesn't.
Yes, it certainly doesn't go far enough. That's true.
To Bill's point, though, who makes that decision? Is it the Fed that makes that decision?
Well, it would be.
There are many regulators out there.
Yeah, it would be a regulatory decision, but right now the decisions are being made ad hoc. There needs to be a serious process.
So another committee, perhaps.
Well, regulators that actually avail themselves of information before they make momentous decisions.
But capital requirements, I mean, these banks have done an awful lot of work over the last 5 years to try and shore up their balance sheets. They have the greatest cash levels they've had in a long time. Aren't we at a level where they may be too big, but they're not going to fail? I mean, the part of Dodd-Frank has made sure of that, hasn't it?
That's exactly right. And, you know, the FSOC, which we just talked about, can control capital requirements. So
that's exactly wrong. The banks have almost no capital. Big banks, even JP Morgan with its so-called fortress balance sheet, is operating at 3% leverage. It's got $33 of borrowed money for every dollar that investors put in.
And what was the leverage before? What was the leverage before the financial crisis? It was much higher, wasn't it?
I don't know how much. If you want really terrible or awfully really terrible, we are still at a woeful state with terms of bank capital standards.
So you're saying that banks should not be allowed to take risk. Isn't that the business they are in?
There is a difference between taking risk and having shareholder money at risk. Right now, again, we're using depositor and borrowed money to be put at risk, whereas companies like JP Morgan are only putting in $3 for every $100 that they gamble of actual shareholder money.
Lenwood, I know you think I'm doing your work for you, but I got 2 words for you as well. London whale.
Well, no question there. I mean, banks, you know, do have problems, and like we were talking about earlier, they haven't been prosecuted for fraud. I think that's wrong. People that did fraud should be held accountable.
All right. Well, this is an issue that's not going away for a long time. That's for sure. Thank you both for your thoughts today on Too Big to Fail.
Thank you.
Thank you.
All right.